I figured out the simplest scalping strategy that turns losing traders into profitable ones. Not only has this strategy worked for me, but it's also worked for other traders who have tried it out and they have turned into being consistent over the long run. I've compiled a ton of real trade examples, so by the end of this video, you will know exactly how to execute this strategy just like these other profitable traders. To give you a super quick overview before we dive into the nuts and bolts of how you can consistently execute this pattern yourself every day, all I do is when the US market opens, I look at the first 30 to 60 minutes. All I'm looking for is a clean support and resistance level, and then I look for a few key patterns. For example, right here, there's a nice double top. All I do then is I see a nice candlestick pattern, and then I enter in on a trade short, betting that the market is gonna go down, and then from there, I let the market play out. I've noticed over time that the market consistently has a reversal in the first 30 to 60 minutes of a trading day. And so what this strategy does is it allows you to take advantage of that reversal, and then coupling that with looking for key areas of resistance or support, you're able to essentially ping pong the market between those levels, capturing a big potential profit for a smaller amount of risk. And this is all I do every day. This is the only thing I look for every single day. And it allows my trading to be super simple and straightforward so that you can go into every day with a plan and know how to execute it. Instead of what I did before when I was unprofitable, I was trying to match what the market was doing, and that just was not profitable. And I know from teaching a ton of people how to do this, that's the exact same way they feel as well. And to help you consistently execute this strategy, I've created a free 14-page guide that'll walk you through the major patterns that I use to look for reversals, look to enter in on my trades for confirmation every time I look for this strategy. You can download it in the link in the description of this video or using this QR code. Now, to break this down for you in a simple entry checklist, the first thing I do coming into trading every single morning is look at the big picture. Now, I trade on a 1-minute chart of the NASDAQ futures, but you can really trade this on any time frame or any market. I have a lot of students that just trade this on an hour chart. They use it on crypto, they use it on Forex. You're just reading the candlesticks at the end of the day. There's no indicators, anything fancy. So that's the big important thing, is that you can trade this anywhere. But this is what I trade on. And so the first thing I do when I come into the market here, I kind of just zoom out and look at, okay, the market's opening up here in a minute. What am I looking for, right? Where are the key areas of support and resistance? Now there's a big one down here, and then there's kind of a big one up here for a resistance level. It touched here yesterday, it touched here today. And then there was a big bottom down here. And another thing to keep in mind is there was a touch here overnight, and then this is where the market closed the previous day. And so sometimes the market will bottom at the previous day's close. So I just drew this one as well to just keep in mind for that. And so when the market opened here, it opens up at 7:30 my time, but this is just the New York Stock Exchange opened. So 9:30 Eastern technically. So all I looked for is, okay, well, we opened and we bottomed here at that, overnight previous market close level. And so in trading, you always want to just keep an open mind of, okay, I don't know where the market's going to bounce, but I'm going to be ready for if it's going to bounce at an area I like. And so what I was looking for here was it to potentially bounce here, because it bounced here once and then it showed some strength and came back and started to make a double bottom. That's a really good key pattern. And so from there, I pulled up a risk reward tool and I said, okay, if I jump in here and I put my stop here and I'm risking, let's say $90, I'm trading on a small account right now, trying to grow it again, just to prove that this works on a small account. Again, you've seen just like that example I just had before, I've used this on a large account. You can use this kind of on any size that you want. But essentially what this tool is showing you is that, okay, if I trade 4 contracts, I risk $90, where can I, if I target, I like to target 3 times my risk. If it goes up here, I'll make around $270. So to go into the live recording of this, because this is an actual trade I took recently, is once it kind of had that double bottom, I looked for a buy. And so that's kind of jumping forwards a little bit, but to go back to really step 2 of my process is look at this downtrend line right here. That's
a big key to these reversals is seeing that, okay, well, the current downtrend is broken, because if you're looking for a reversal trade, well, the market into a support or resistance level, and I don't have it drawn here on this chart, but we just looked at the level that we're bouncing off of. The support level would have been right here. And the key is, well, the market in a strong downtrend, it could just keep going and break through a support level. And so what you want to do is you want to first make sure that that downtrend is actually broken so that it can start a new uptrend. And so that's what I look for every time as well, is make sure, analyze, look at the candlesticks, just look at the swings. You don't need to use any indicators or anything. You're just looking at the raw data. I also realized over time that simplified things way more for me, is just looking at the raw data of the trade. And so from there, okay, step 2, downtrend is broken clearly when this happens. And then after that, it comes down here and makes a nice clean double bottom. And then I wasn't quite sure about it after this candlestick, because this was a really strong bearish candlestick. I wanted to see a little more strength. Sometimes in the market, what will happen after a big candlestick like this, it'll bounce back a little bit just because it's overextended a little bit, but then it'll continue lower. And so what I waited for that bounce, see if it continued lower with this candlestick right here. Essentially, that's it, continued lower, and that failed. And so then I put in an order right there, jumped in long, and then I let the market play out. I moved my stop to break even after it broke this previous high, because I wanted to take that risk off the table. You don't want to let the market go in your favor and then come back and knock you out at a loss. And then from there, I just trailed up my stop loss. I put in a limit order actually at 2 times my risk, just because the market kind of felt a little choppy. I was totally happy getting 2 times my risk for a profit. And you can clearly see there, it almost hit me. And so then I just elected to kind of move things up a little bit, because there was this uptrend here. I kind of like to manage with that as well. And then from there, it just looked like it was starting to slow down. I kind of was just reading into the candlesticks, reading into the market that, it's either gonna continue higher, or if it kind of starts to just slow down, I'm gonna move my stop loss up and get out. It's at that 2 times my profit that I already am kind of looking for. I only risked like $90 on this trade, so I'm up really 2.5 times right now. And so at that point, I'm happy with the trade. That's $250, quickly after, 20 minutes. And then at that, I called it for the day. I didn't even have to trade for 60 minutes. And you can see my read there was right, and the market kind of started to pull back. And at that point, that was just a quick scalp. And so this is just what I repeat consistently every single. Here is a great example of using a 3-line strike for an entry with a couple of other patterns. Basically right here, this 3-line strike pattern that's happening right now is confirming a double top coming in. All I like to use these for are reversal trades. You can use them for continuation trades as well, but I like to use them for reversal trades. And you can see here, the market's come up and it's made one top, and then essentially you can see we have momentum, and then look at these multiple candlesticks right here, we start to slow down. We've kind of come up here, right? There hasn't been any bearishness, and then all of a sudden, boom, we have a massive candlestick right here showing that switch in momentum, that okay, especially with being at this double top in that same area, you're essentially confirming that double top, which is even better and makes it more likely that this is a good area to enter in on a 3-line strike pattern. And so I like to enter in at the break of that low. This is trading a 1-minute chart. The candlesticks right after are pulling back slightly. And I actually think that is a even better confirmation if the market pulls back a little bit and then continues lower and it doesn't break the high of that 3-line strike pattern. So if I just zoom in a little bit more to let this kind of play out, I put in an entry here right as it breaks below that 3-line strike pattern. And then I put my stop up here above the double top. If the market comes up here and I'm wrong, just get out. The idea of this is you are entering in really accurately at the highs, and you're looking for, capturing a whole swing lower. And so just to kind of watch this trade played out, you can see from there, it kind of moved all the way lower and kind of hit a target that I was looking for more towards the lows. And so I closed up at about $600, and it gave a perfect signal at the highs to get in. And then from there, I was able to ride the swing lower
and capture a really nice trade. Here's another example, and this is on the flip side, looking for a long. You can see clearly I'm looking at a support level here where the market's bounced once, twice. There was probably another bounce here before on the previous area in the chart that I was looking at. And so I'm already looking for the big picture of the market to come down here and bounce. And to accurately enter and confirm that the market's gonna bounce here is I looked for the market to make essentially slow down here, and then it had a strong bullish candlestick here form, and I got in essentially as it was about to finish closing. I got in a couple seconds earlier, but I essentially got in as it created that 3-line strike pattern. And you can see here, it was actually a candlestick after the bottom here. It wasn't right away, but it was still showing me that switch in momentum. And it gave me an accurate entry to enter in at the bottom of the swing, have a tighter stop loss, and then capture the reversal back higher. And so this is super, super powerful for capturing trades like this. You know, every trade is gonna go slightly different. We're gonna go over that massive one here in a minute, but this is still a really nice trade to capture, you know, $400 or $500 worth of profit. Again, just trading 60 minutes in the morning. And so at that point, you know, the market kind of slowed down. I said, okay, I wanna get out if it breaks lower because it could just give that swing back up. And that's where I kind of got out at, about $400, and moved on with my day. Now to go over this trade that I started out in the beginning of the video and kind of just show you, walk through managing this trade and also how to enter and confirm using this strategy a little bit more than I've already gone into, let me walk you through how I entered and found this trade. And so initially, what I'm seeing is you can see that the market had a nice methodical trend up here. And then this bearishness right here showed me that, okay, something's changed. We've broken this uptrend. That's a massive thing that I like to look for. And then also this big trend line right here is drawn from a bigger picture, where on a 15 or 5 minute, I can see that the market consistently is coming up to this level. It comes up here again, it's likely to continue lower. Obviously, if I see the 3-line strike pattern that I like to see and a couple of other factors. And so seeing that it had this big bearishness here, that was a great confirmation to say, okay, the momentum in this market is switching. You always want to take that into account. You want to have a big picture idea of where the market is going. If you're either using this, you can see right here, here's a great example of using the 3-line strike pattern for a long, is there's this nice upwards trend line. The market comes down to the trend line. It chops there for a couple candlesticks, and then boom, you have a massive switch in the momentum, continuing it higher. And you would confirm and use that right here because you're seeing an uptrend already in place. You would already have drawn that uptrend off of those 3 lows, extended it, assume that, well, the market comes down here and gives me a 3-line strike pattern. I'm gonna bet the market's gonna go up. You would have got in here and captured a nice move after that. But once it comes up to this trend line, which is a big picture downtrend line, well, you got to think of it in the flip side. I think that this is more likely to push the market lower. And so I need to make sure that this shorter term trend is broken, which happened right here, and that this bigger picture is going to continue and take into effect again. And so then the market broke down here. That's why I didn't get in up here. You could kind of say there's a 3-line strike pattern here. That for me was a little too aggressive. I like to wait for a little bit more confirmation. We came down here, had a little bit of a bounce, showed, you know, some momentum. Essentially, you could even say this is a 50% pullback from this area. You can see it's literally in the middle of that box. The market likes to do pullbacks like that are literally halfway of the move it just had. And so it moved down this far, it pulled back halfway, that's what this little spike here is, and then it sold off. And for me, this isn't a super picture perfect and really nice looking 3-line strike pattern. But for me, I saw, you know, okay, there's some movement up here, there's this big attempt to go higher, and then, you know, it's essentially in this little mini channel, and then this big candlestick here, especially with the fact that it wicks higher right here, this little wick right here, it's essentially like a micro double top. And then I get in, you know, I actually got in down here a little bit because it was moving pretty quickly, but the signal there is at the candlestick close right there. And so that's what I used to jump in on this. And then of course, put the stop up here. Doesn't need to go all the way up here above this trend line. You know, what we're trying to do is risk a tight amount and then have the big picture potential for the market to really start moving in our favor. And so in this trade, I think I'm risking like $500. The last couple of trades were smaller size, but that's why you can use this kind of in any account size. You can scale it up because again, trading is super scalable. You just use and find one pattern that works and then increase the money. You don't need to try and find more patterns to make more trades. That's what kind of kept me from being profitable initially. And so you'll see here actually, once the market essentially made a pullback here, right here, and then moved down, I moved my stop loss to break even because I want to kind of tighten up the trade and get out if it's gonna pull back on me. Sometimes the market's just gonna be choppy and all over the place. I don't wanna trade in that. I wanna be in trades, and I've noticed these trades will work out pretty cleanly in your favor if they're gonna work out. And so from there, it starts moving down pretty quickly. I'm trying to see, okay, is there this downtrend line that I can kind of expect the market to pull back to? And again, that's kind of thinking about, okay, how am I managing this? As you are trading, you want to be thinking what to do next based on logic, not, okay, I'm up, almost $3,000. I'm really nervous. This is a lot of money. I need to get out. Or what if this keeps going? I could be up 5,000, 10,000, right? You can't let your emotions kind of control what you do. You need to have a logical plan to trade with. And so once this kind of got rocketing in one direction, it gets really far away from the trend line, and I don't want to hold through a pullback. At this point, that's a big pullback to hold through for it breaking that trend line. And so I start using kind of more of a tighter trailing stop loss with kind of previous candlestick highs. And you can also see there is this blue box down here. That's a support level. And so big picture, I've looked at, okay, well, the market's already bounced here a couple times. If we come down here again, I'm gonna expect that we're gonna bounce or slow down. And this is a really fast moving, unhealthy move, which is great to be in if you're in it, but it's likely to snap back at some point. And I wanna be out when it's gonna snap back. And so that's why I have kind of a tighter trailing stop loss. And you can see it's starting to snap back a little bit. And I wanna give it a little wiggle room because these things can break through a support level and keep going lower. But in this case, it kind of starts to chop here, it makes a double bottom, and it essentially knocks me out here. But I get, about $3,500, $3,200 worth of profit. And you can see here, the market bounced right here. And so that's why I'm kind of thinking, okay, well, if it comes down here again, I want to see if we'll bounce again. And so that's kind of the first thing that I always look for in this strategy is looking for the market to bounce at a key level. You don't want to just be randomly thinking, okay, well, it'll go here, it'll go there. That's when you start to become reactionary to the market, and you want to actually have a plan and wait for the market to fit that plan. I have realized that over time that that's really the way to become profitable. And the other part of that is just find one strategy and one pattern that works. You don't need to find 10 different strategies and be trying to capture, every move in the market. Because like you just saw, when it comes to the sizing and scaling, these numbers in a way can become infinitely huge, right? You could be literally risking $10,000 on a trade and make, $40,000 in 20 minutes. Now that seems mind blowing because, when I first started, I was risking literally like $25, $50, but now in this trade right here, I'm risking something like $500, and you'll see the potential can go really fast once you kind of get this in play. And so the next thing I like to look for is you can see the market came down here to this level and it actually broke this downtrend. So that's kind of the second thing I like to look for when you're looking for reversals. You need to make sure that the downtrend is broken. And so what I've done here is I've kind of confirmed that after this trend was broken. And so it's starting to show some strength, some bullish candlesticks. And I like that for getting in on a trade, betting that the market is gonna go higher. Now, kind of the last couple thing I like to look for is I wanna see the market kind of start to show kind of a bottoming pattern. Right here, it's basically making higher highs. And so I like this as this candlestick was a really kind of a big bearish candlestick attempting the market to go lower. And it failed here based on these candlesticks. And so I like the idea of saying, hey, I wanna get in long above this candlestick right here, betting that the market is gonna go higher. And so I put what is called a buy stop order above it. If the price of the market touches this price, put in a market order. I don't care where you fill me at, just get me in the market. And most of the time you can see it literally just filled at that exact price. But sometimes it can, fill you right here because the market can move pretty fast. But that is the order I like to enter in on most of the time. And you can use a buy limit order that'll get you in below or exactly at that price. But the problem with that is, well, for this example right here, well, the market kind of took off here and you would have felt a lot of FOMO and because you would have missed out on the trade and you would have had to wait for and hope that the market comes back down and fills you at that price. And so you can see here quickly, just over a couple candlesticks, I'm already up $1,000 on this trade, risking, I think $500 or $600. And so this is where the power comes into play. Is I'm trading 4 oil futures contracts here, and you can see it's moving in that 0.01 increment, that penny size, compared to the S&P 500 futures that we're just looking at was actually moving in that quarter of a point size, that 0.25. But you can see here clearly that the money is a lot more. And so for me, my strategy is I like to kind of get in when I see, basically you can easily see here is there's a lot of momentum here. It started to slow down by essentially just seeing that the market kind of started chop here. And then I look for a few key factors to jump in and catch the momentum to the other side. And so I moved my stop here to break even. And then as this starts to kind of get pretty accelerated here, I like to use kind of the idea that, hey, okay, I'm gonna give it a little bit of wiggle room, but I am gonna move my stop up if it pulls back because, I'm up about $2,000 and, you wanna let this thing run if it's gonna run, but you also, you can see like just as it pulled back right here, it can reverse very, very quickly too. And so that's where I really look to, manage my trades. But again, that's come with a lot of practice and experience trading this. My target here, you can see now that we're getting up to here, you can see we're kind of in a support level that I've drawn from previously in the chart. And that's where I'm gonna expect things to slow down. And so you can see I've moved my stop loss up here. It's, we're up a lot more money now. And this is where kind of the power comes into play of using technical analysis with futures. Is you have that leverage and you have that ease of getting in and out of the market, but you also have the simplicity of, you're not having to deal with the complexity of options and other factors that come into play with other assets. And so to close this out, I'm not gonna go into my strategy too much here. I have a lot more videos on that, but I pretty much get knocked out right there. Now, this is a good example of a trade on a small account. I'm kind of doing a small account challenge right now, and this is on a small account. And so I'm risking $100 here, betting that the market is going to reverse off of this resistance level that I've drawn, and then, betting it to go probably kind of down here. And we'll talk about targets and why that's a good target later. But if it gets down there, that's a good 2-3 times my risk. And on a small account, risking $100, that is a nice profit. And so the first thing that I'm looking for, obviously, is that it comes up to that level first, right? That is the number one key thing to make reversal trading work, is the patience to just wait for the market to come to an extreme and key level. You can even see the market came here and reversed off of this little area right here. You can say, well, it bounced here, it bounced here, it bounced here. And so maybe it bounces here. Maybe I should have got that. Maybe you even look at hindsight and say, oh, I'll try and get that next time. But those don't work very often, and they're more likely to cause you to lose money in the long run. It's better to just sit out, kill that noise, and wait for the market to come to these extremes. And then when it's oversold or overbought in this case, you can capture on that strong reversal to the downside. And so the first key that I like to use is after it's kind of hit that level, again, you can see it's not quite in my zone, but again, it's so close, it's good enough. The first thing is making sure that uptrend is broken, because when you're counter trend trading, you don't want to go against a trend because, it might come up to a level here, but it's in an uptrend and it's just going to keep going, right? We don't know, these levels aren't going to hold every time. It's not just blindly sell or buy at these levels. And so that's kind of why I have this uptrend here, is you can see that we had strong bullish candlesticks here, and then it kind of started to break. It had a doji here, it had a bearish candle here, and then it made kind of another push higher. And so for me, that's good enough to say, hey, yeah, this strong kind of micro trend right here is broken. And you can see the market's kind of being quick with its reversals. And so I'm okay with thinking that that's a good enough trend break. Certain kind of trends, they'll need something else. But in this case, for this kind of very one directional, unhealthy trend, it's good in terms of clearing that kind of need for a reversal break. And so after that, my next key that I like to look for is kind of a reversal pattern or reversal candlestick pattern. And so in this case, the market started to show some weakness here with this kind of doji here and this kind of red bar. And it broke that uptrend. And then it made these two candlesticks here, these bullish candlesticks, breaking this previous high. This high right here became a new one. And for me, that said, okay, it's still going higher, but as soon as this big bearish candlestick form right here, this big red one, that to me is showing it almost made a micro failed breakout. It made that kind of trap where it attempted to make a new high, and it did. It made a new high, but barely at all. You know, it didn't make much before this big bearish candlestick came in. And so if I kind of zoom back in the recording and kind of show you that in real time, right now to speed this up a little, once this candlestick finishes forming, I think that's a good signal for me. And I want to get in right there at the low of that candle. So my thought is, okay, I want to get in when it kind of breaks the low of this candle, because to me that's a strong enough signal that it's likely going to reverse there. And so you can see initially it kind of starts to go against me and doesn't look great initially. But you know, that's where when things reverse, sometimes they take a little while. The market won't always just reverse on a dime. A lot of times it'll come up like it did, kind of start to settle down and slow and lose some of that momentum and strength, and then it'll give it back up and start going. And so that's what I'm kind of looking for. And so for once I entered in there, I moved my stop above this high, because the whole idea is if it comes up here and knocks me out, you know, I'm looking for that kind of quick reversal to fail. And I think if it comes up here, comes back down and keeps going higher, I think that's a stronger uptrend. It's had a healthy pullback if it does that, and then it keeps going higher, and you know, I want to get out. The idea is with trading is you take your stabs, they either work out really quickly and really well right away, or they just don't work out and you move on. If you're trying to force a trade in conditions where it's just not great and not working out, you're gonna lose money if you try and enter in the market over and over. And so once it kind of got going in my favor here, and again, this is on a small account, I think I'm risking, it honestly might be like $80 or $90, not even 100. But the idea is I moved my stop loss here to break even because, well, if you look at where we're at here, we had a news. This was just a news announcement. I'm trading the NASDAQ futures here. Again, you can kind of trade this on anything you want because you're just reading the candlesticks. But there was kind of a news announcement that made a big spike right here. And then from there, we've been in kind of this choppy range. And so my worry is here is I do think we can reverse off of here and push back down and kind of push back to here. We'll talk about that in a second. But I'm looking for, you know, that to reverse, right? I don't want to lose money if instead the market's just going to be in this mode where it kind of just sits here and goes in a sideways chop. I'm looking for kind of a little bit larger of a move where I, you know, risk a small amount and make a large amount. And so when it kind of had this initial move right here, and it could have reversed right here off of that big green candle, and I would like to get out at break even at that point. And so, you know, once it kind of did that, I moved to break even, and instead it kind of just had a little pullback, which is good actually in terms of the health of this move down. And then from there, once it starts to kind of make a new low, I actually moved my stop loss down here again to, again, capture some of those profits, because I'm thinking that this market is pretty tight. I think it's more likely that it kind of whips back and forth, and I'd rather get out with a small, decent sized little 1 times my risk, maybe 1.5 times my risk win, versus leaving it here and, you know, hoping a home run happens, because those do happen and I catch those, but you have to pick your spots, right? You don't always want to be managing the same way with your trades. And so here you can see that I've actually drawn a downtrend line here. And I think that's a really nice way to manage because it looks like it's starting kind of to be in this little downtrend. And the second thing is, well, we're getting close to this area. Now, this isn't a major support level. It's not something I have on a larger time frame. That's why there's not really a zone drawing there. This is where you want to use as smaller targets for your trades though, because especially in a market like this where I don't think it's going to be a home run, I think it's more likely to bounce and reverse off of a micro support resistance level. Now, I'm not necessarily taking my bets and trades off of those levels, but in terms of if I think the market's going to be pretty tight today and I want to just capture a nice little swing like this and then get out at a nice profit, I'm okay using that. And a lot of the times when the market has a big move like this, kind of like we were talking about earlier, that it's a big area where the market velocity off that area was really big, it's more likely that when the market comes back down there, it's gonna find a bounce. And it's gonna find some buyers and support. And this trade right here is going to dry up and slow down. And I wanna capture my profits here because I'm getting, about 2.5 times my risk on this trade. And that is a great trade to just consistently make money and grow your trading account. And again, that's what you want to start out with. You don't want to be trying to get home runs, make a ton of money, make your small account grow over time. And then this, you can 10x this size. I have trades on my channel where this trade would be $2,000 and it's the exact same setup. And so actually at that point, you can see I had my stop loss down there because I was managing it pretty tight because we got down to this other area and it closed out there and it actually started to reverse. And you can see it started to reverse off that level. And so just looking at right here, pause the video and kind of think about what patterns you're seeing that we just went over. There's a couple here that you can see. So I'm just gonna give a couple seconds, just pause it and just kind of see if you can see what these patterns are. And then from there, to kind of walk you through what I'm seeing is, we kind of have a big resistance level here. And the markets come up in, kind of just a methodical uptrend, right? And then all of a sudden, we have a massive move up causing, in my mind, a big shift. This is out of nowhere. The trend was clearly just kind of chugging along, do its thing, and then boom, it has a big move. And so for me, that's a switch in what's going on, an overexhaustion usually. And so from there, it moves up, pulls back, has one more attempt higher here, and then kind of to zoom in on this area, looking at these candlesticks as well, is there's a 3-line strike pattern here. It kind of shows up a little funky, but it's pretty much just a couple of sideways candles and then it slowly moves up, and then over this candlestick here, it moves up and reverses, and then the next candle, it just gives it back up. And so for me, I waited to see a couple candlesticks, how it responded. That's kind of the intricacies of getting in short and just playing these strategies over time. You'll kind of see how you like to play in a couple spots, but then I entered in on a trade there, put my stop loss above here because my thought is, hey, if it comes up here, I just want to get out. This is obviously a strong move. If it's going to keep going higher, it's going to go pretty quickly. Or if it reverses and gives back this move up I like, it's going to happen quickly as well, because these moves, they generally happen quickly. And so this is again on a small account. I'm risking about $100 here, maybe a little even under. I don't quite remember. But the big thing I'm looking for here is, zooming it forwards a bit, is I went to break even here once it kind of gets moving in my favor. And you can see I drew this support box because my thing is, I'm thinking that it's gonna, a lot of times, like we talked about earlier, with these targets or with these moves, a good target is it gives back this kind of overextension or overexhaustive move. That happens a lot of the time. And once it kind of gives back there, then it's kind of, it's back more in equilibrium. And, for me, my edge is gone. I have a good understanding of how these move. I don't have a good understanding of how they move after, but that's okay, right? You only need 1 or 2 patterns to be consistently profitable trading. And so this is my pattern, right? And so for me, I liked the idea of scaling out of my trade. This is a little more advanced, but I, broke up my stop losses of saying, okay, I want to get out of, 3 out of 5 of my contracts right here if it decides to snap back quickly. And then I also want to just kind of give this other one a little more wiggle room if it's going to bounce here and then keep going lower. This can be a big switch in the overall trend. And so I want to give it a little room. As you can see, I moved it down there. I do kind of have a kind of mental stop in my head. Now I quickly moved it back, but you can see I'm trying to give it a couple of candlesticks of a pullback here. And then most likely I'll move it down once it kind of starts to reverse or kind of gets to either 1x my risk. The idea is I want to give it some wiggle room, but I don't want to try and give it, give this whole swing back up. And so kind of it starts to reverse there. And so I'm gonna move my stop down now because this is kind of a little micro top, you know? I think if it's gonna make this little micro double top and keep going lower, that's a great spot for my stop, because if it breaks this, you know, I think it's, you know, it's kind of not doing what I'm looking for. And that's how I like to manage my trade, is if it's doing what I want. And so from there, you know, it just kind of chopped around a little bit and looks like it was breaking lower here. And so it starts to break lower. I'm moving my stop down. And again, it's still kind of in this range you can see here. And this kind of looks like a little bit of a little mini fail breakout, you could even say. And I believe it knocks me out here. And so that trade still closed up at, you know, I think two times my risk. Really good, profitable trade right there, which is, you know, a great growth on a small account.
And so make sure to download that 14-page free candlestick patterns guide in the link in the description of this video, or with this QR code right here. It'll really help you consistently execute this strategy and show you more patterns that I use to enter in on, other than the quick ones I just went through. As well, if you want a more in-depth guide into this strategy and more trade examples to kind of flush out how it actually works, check out this video right here.